being here in Davos with such a great panel and being able to talk about crypto at the 2024 annual meeting, I have to say that crypto is in such a different place than we were even just a year ago. A year ago, a lot of the headlines that surrounded crypto, the narrative was that crypto was dead, crypto was going to flame out, and we very quickly found ourselves in a crypto winter. I believe that with each successive crypto winter we've had, it's been a time for companies and businesses like those that are represented here on stage to really build, to focus inwards a little bit. And coming out of crypto winter, you've seen a tremendous amount of resiliency from the crypto community. That's reflected in development work and certainly also reflected in prices, right? If you look back at 2023, Bitcoin was one of the highest returning assets of the year, if not the highest returning asset of 2023. And so now as we're moving into this next phase, this next cycle, we certainly had a big win in the US just last week with the approval of spot Bitcoin ETFs coming to market, and believe that that can be a major, major catalyst for continued adoption, more capital infusion into the asset class. And what I like to think is really, for a lot of folks, really weaving crypto into the fabric of the financial services ecosystem in a way that it candidly hasn't been before.
Alrighty, what is going on, everybody? Welcome back to another CYPRX video banger. This is going to be a quick video breakdown showing you guys some clips of some panel discussions, showing you guys that we are about to enter into an age of utility. Multiple digital assets, including the digital asset XRP, will be utilized in the new financial system and will coexist alongside stablecoins, CBDCs, and will have a massive percentage of the market share that is set to come into crypto from traditional financial players. And we are on the precipice of experiencing that, ladies and gentlemen. I cannot stress enough not to lose sight of the long-term vision, even in the most recent market downturn that we have just recently experienced. So we're going to start the video off today by reading Brej Tinelli. Hopefully I'm pronouncing this correctly. I want to show you the role that this individual plays. Senior executive with over 20 years in capital markets with global coverage, successful track record as head of market development. Where? Head of market development at RChex. Okay. And the reason why I'm showing you this is because on their LinkedIn profile, okay, check this out. Brej Tinelli, 1 week ago, huge congratulations. In this piece right here, in this LinkedIn profile piece, okay, we're going to cover two things. Financial institutions are for a fact interested, and how they mention utility. And then we're going to get into the video breakdowns, okay? Huge congratulations, Ben Brophy and the entire Fidelity International team, who together with JP Morgan, Onyx, continue to push adoption of tokenization of real-world assets towards scale. At RChex, we recognize the collateral mobility and utility are key drivers for this and other tokenized MMS money market funds, which can deliver immediate impact. So pay attention how they say utility is a key driver. So take a second and listen to these representatives mention that we are on the precipice of entering into a real world utility phase.
You are seeing a lot of politics play in some of the challenges, but I will tell you that at least behind closed doors, we are finding much more open ears. And now the fact that you have use cases that are showing real results is really helping propelling this forward.
So we've seen this ecosystem, the blockchain ecosystem, evolve over the past decade and a bit. The narratives have come and gone. We started up with the Bitcoin narrative, we moved through the ICO narrative, moved to NFTs, and now we're seeing all the hype has been and left the system, and we're actually now seeing real value, real fundamentals becoming the dominant narrative as it's moving in.
I think if we want to enlarge and see more, like there's over $1 quadrillion of financial assets, off-chain, and if you want to see, 10% of that coming on-chain, we have like maybe 150 billion in terms of stablecoin so far. Regulation, I would say, is a key piece in terms of surveys we're doing for more of TradFi to come on-chain, but that's now starting to really fall more in place. Think of MiCA in Europe or Singapore or UAE, where you see frameworks really emerging. And so I do expect that we're really at the start of a paradigm shift whereby blockchain technology is really going beyond much of the hype and really into utility and powering financial activity much more going forward.
In the long run, I think the best technologies applied with the best use cases, delivering the best utility, that they'll win. And what that looks like over the next 10 years,
right. So we have some Ripple representatives in there in the mixed, Brad Garlinghouse, Marcus Imfinger. We have some other panel discussionists just to mix it up a little bit to show you that this common perspective is shared amongst the vast majority of individuals in this space as we speak. Now, I want you to take a second and listen, because a lot of people will say they're not going to utilize the digital asset XRP. Okay. Well, I want you all to again focus on the terminology. Utility is a key driver. And I want to take your attention over to this fundamental piece. And I'm sure that some other influencers have covered this, but we're going to pay attention to 2 paragraphs. Ripple collaborates with Archax to bring hundreds of millions of dollars of tokenized real-world assets to the XRP ledger. This is from June 13th, 2024. The leader in enterprise blockchain and crypto solutions. I'm going to show you all how they are going to be utilizing the digital asset XRP, and they tell you in these panel discussions. And Archax, hopefully I'm saying that correctly, the UK's first financial conduct authority regulated digital asset exchange broker and custodian today announced an extension to their existing collaboration, which is expected to bring hundreds of millions of dollars of tokenized real-world assets onto the XRP ledger over the coming years and establish the XRP ledger as one of the leading blockchains for real-world asset tokenization. What did Marcus and Finger say? Quadrillions of dollars coming on chain, right? Keep that in mind. We have hit a tipping point for mainstream adoption of digital assets for real-world use cases, said Graham Redford, CEO of Archax. There is a clear real-world utility and use case like real-world asset tokenization for the operational efficiency and access to liquid markets and transparency inherent to crypto. And Archax is already tokenizing assets such as equities, debt instruments, money market funds. Financial institutions are now understanding this, and we are excited to play a part in helping them to embrace the technology by bringing their assets onto the XRPL. You all see that, okay? Keep in mind, I just showed you all how the individual right here, again, what role do they play? Head of market development said, keywords, utility is a key driver. And you just saw all the market participants, including representatives from Ripple, tell you the same exact thing, right? Now I want you to take a second and listen to Jazzy Cooper, a representative from Ripple, where she goes on, by the way, she's the head of DeFi products at Ripple. And she goes on to say, this is finally going to allow for a seamless flow of transfer of value. Take a second and listen how she mentions what's going to solve this is a bridging mechanism.
As time went on and the number of blockchains continued to grow, and you now have L1s, L2s, Ethereum came on the scene, and it just continues to proliferate. It's almost as if we came almost full circle, and that now we have new walls and new silos where liquidity gets trapped on each of these individual blockchains. So interoperability and infrastructure like that of Axelar and Layer 0 is a great solution to that problem, and it's finally going to allow for the transfer of value, so tokens moving between these individual chains that all have their unique advantages and reason for attracting users, as well as information through new technologies and advancements like general message passing. So I think there are kind of 2 clear benefits in terms of how this interoperability will unlock additional liquidity. And the first is market efficiency. So now that value can seamlessly flow between chains, you no longer are going to have the issue where a particular user wants, say, USDC, for example, but that token is not issued on a particular chain. USDC can be brought over by a bridge, for example, and now there's greater access. USDC can be brought over by a bridge, for example, and now there's greater access to a particular.
Do you remember a Ripple infomercial from just a couple of months ago? I'll play that for you here, how they go on to reiterate to the audience that XRP is that bridging mechanism. Take a second and listen.
USDC can be brought over by a bridge, for example. And
here's how it works. The business receives the quote, approves it, and then submits payment instructions. A digital asset acts as a bridge currency. A digital asset acts as a bridge currency moving from the UK to the Philippines. It is then converted to local currency through Ripple's global partner network. The recipient.
Right? Okay. I cannot stress enough, ladies and gentlemen, devil is in the details. Now, I want you to listen to this representative sitting on a panel discussion with Brad Garlinghouse on stage at Davos 2024, letting you all know the same thing that the CEO of Archax is saying, and the again, head of market development at Archax is also saying, and we know whom in which they just partnered with Ripple. Look, he said, see, it says right here, financial institutions are now understanding this, and we are excited to play a part in helping them to embrace technology and bringing their assets onto the XRPL. On stage at Davos 2024, listen to what this representative says, how he agrees with Brad, and how financial institutions will be the next wave of players in this market.
And I think the whole world is shifting towards this second strategy, towards running a proper infrastructure, compliant way. And it suits the next wave too. I would like to add further from Brad and Michael that the next wave would be probably driven by institutional money, which is like real serious money entering the space, not just retail customers. And as a prerequisite of those institutional funds, they cannot invest in something illegal.
XRP in the US is one of the few things we can say definitively is not a security.
Literally on stage with Brad Garlinghouse telling you all that financial institutions are coming, we can see partnerships taking place where they are attempting to bring financial institutions on board to the XRP ledger. This is all a systemic plan. You heard Jesse Cooper mention the terminology bridging mechanism, a bridge currency, right? And you saw in the infomercial how Ripple's XRP can be utilized as a bridge currency.
You no longer are going to have the issue where a particular user wants, say, USDC, for example, but that token is not issued on a particular chain. USDC can be brought over by a bridge, for example, and now there's great.
A digital asset acts as a bridge currency moving from the UK to the Philippines. It is then converted to local currency through Ripple's global partner network.
This is not a joke, ladies and gentlemen. Again, wake up, devil's in the details. This is all the information and the research that the mainstream media will not show you, that the bullish moonboy hypists will not put together. They just think XRP is going to be a significant price appreciation in the future and don't really understand the time in which this is all going to take to unfold.
Well, quite simply, I think blockchains and digital assets are the future of finance, really, for many, many asset classes. Yes, the regulation needs to evolve and mature. And certainly there needs to be critical mass of both buyers and sellers and lenders and borrowers. But as more banks like ANZ get involved with the services I described around tokenization and smart contract provision, wallet infrastructure, if that's coming from a trusted counterparty like a bank, like ANZ, our customers are going to be much more inclined to reveal to themselves the benefit of fast settlement times, very low transaction costs. It's going to be gradual, then sudden. It's going to be gradual, then sudden.
And so that's definitely, we're at the very early innings, so to speak. So I would say like we're seeing growth. If you look at the stablecoin as a financial instrument, for example, 3 years ago, the total market cap was around 5 billion. Now it's like 150 billion. And people tend to overestimate these kind of dynamics, maybe, in the short term, but then underestimate it in the long term, which is, an insight.
Zoom out, see the long-term vision, understand what is happening via this transformative technology, and understand that is going to take time. You can understand those things. You can survive long-term. Many blessings to you guys. Be cognizant, be aware. None of this is financial advice. And I'll see you guys in the next video breakdown.